If you're a small business owner or you know a small business owner, somebody that has between 5 and maybe 100 employees, and you're struggling for cash, or you know a business owner that's struggling for cash, you are not going to want to miss this video. I think this is an absolute opportunity for some small business out there to be able to really get an inflow of cash in a very short period of time. And it's a lot of money, and it's pretty lucrative for the person who receives the money, but it's also lucrative for the person who refers. So make sure you watch to the end, because you're not going to want to miss this video if you're a small business owner or you know a small business owner. My name is Paris Clough, and this is Financial Self-Reliance. I absolutely love helping people manage, protect, and grow their money. And in this video, I'm going to explain to you something called the ERC, or the Employee Retention Tax Credit. This is a limited time only opportunity for small businesses between 5 and maybe 100 employees. It could go up to about 500 employees, honestly. So if you have a bigger business or a medium-sized business, you can take advantage of this as well. But this is a very limited time opportunity to take advantage of some laws that are currently in effect for small and medium-sized businesses that made it through the 2020-2021 era and are still in business and working diligently to keep the doors open. So the first thing I want to share with you is, what is the ERC, or Employee Retention Tax Credit? It was actually instituted with the CARES Act in March of 2020. It was instituted at the same time as the PPP loan. At that time, it was either or. It was either do the PPP loan or do the ERC. And since the ERC had a lot more hoops and a whole bunch of rigmarole, people chose to go the PPP route. In fact, banks were jumping over themselves to get PPP loans into the hands of these business owners and these small business owners. Well, in December of 2020, the Consolidated Appropriations Act changed the law on the ERC, and now it was you can do both. So the ERC, or Employee Retention Tax Credit, is now available to anybody who had a business during that period of time and who qualifies. Now, it's not as hard to qualify as you might think. Some of you probably have had your CPAs tell you that you didn't qualify, or you don't qualify, or you may not qualify. So you can actually qualify for the ERC tax credit even if your revenues increased. So stay tuned for the reasons and how you can qualify in a few minutes. I still have a few more things to say about what the ERC is. So the ERC is a fully refundable tax credit. You do not have to pay it back, and it doesn't have to be used for a particular purpose. You can literally apply, if you qualify, get the money, and then use that money for whatever you want to use it for as a business owner. You can use it to keep the doors open. You can use it to go on a vacation. You can use it forever you want. There are no rules in terms of what you can do with that money. So how much can the ERC be for you? It can be up to $26,000 per employee. So think about that for a minute. If you have 10 employees, what would you do with an extra $260,000 right now to keep your doors open? Now, here's the key thing to remember though. It's up to. So you know what? That's probably going to mean it's a much lower number. Well, in many cases, depending on who you have apply, or who the CPA firm is and how they really understand the laws, you're going to probably get something, in the middle of that. Well, I actually have partnered with one of the leading CPA firms in the country. They literally focus in on this. They're specialists. That's all they do all day. They've helped over 16,000 businesses get back almost $7 billion, or actually just over $7 billion. I think it's time for your business to be the next one. Many of these 16,000 companies were told by their CPAs they didn't qualify. Thankfully, they didn't listen. They called, and they actually got a professional to share with them the rules for qualification, and ended up that they did qualify. Now, this CPA firm has been doing this so well and so efficiently that they have averaged about $20,000 per employee back. That's usually 20 to 30% more than most other firms are getting. And so this is a fantastic opportunity for a small business owner to get some cash as soon as possible to be able to help support his business. I actually talked with a gentleman just recently where he said that he had talked with a business owner, and they weren't sure how they were going to be able to keep the doors open and pay for some of the things that they had to pay for in order to keep the doors open. And with this tax credit, they were able to have an influx of cash, be able to continue to pay their bills, and have extra left over for other things that they wanted to enjoy. So let's talk a little bit about qualifying for the ERC. What do you need to have to qualify? First, let's talk about the different businesses that qualify for it. Private schools, private universities, nonprofit churches, any and all for-profit businesses, tribal governments, And the only really entity that doesn't apply or doesn't qualify are government entities, police stations, fire departments, things like that. So since it's now an either or test, it used to be where you had to qualify, it would have to be based on your total revenue. If you had a decline in your income or decline in your revenues. That's not the case anymore because there are two other qualifiers that help you qualify for this loan. So you can and still could qualify based on reduction in gross revenue or a reduction in receipts. But the other two ways are for those businesses that may have actually had an increase in income, an increase in their receipts. The other two things are, were you subject to a full shutdown? So a full shutdown would be like back in the day when a restaurant or a gym or something like that was completely closed down. Those particular types of businesses would be able to qualify under a full shutdown. Another one is a partial shutdown. So may or may not be a total shutdown. In fact, you may have had part of your business open and growing, and you actually exceeded your goals with that part of your business, but another part of your business had to be completely shut down. For example, let's say you're a restaurant and you had your takeout and your drive-through were cranking and you actually made money and kept going and didn't have any real big problems, but your dining was completely shut down, partially or otherwise. And that one actually could be part of the qualifying event for you to be able to qualify for the ERC. So it's not as cut and dry as you might think as to whether you do or don't qualify. All I'm saying is that about 95% of the companies that call this particular CPA and get on the phone with them and have them go through the process end up qualifying from one of the many ways that you are now able to qualify for this particular issue. In fact, when you have a partial shutdown, they look at did you have a nominal effect to a nominal portion of your business? And that can be measured in many ways. And if you're a CPA listening to this and you've told your clients or businesses that they didn't qualify at one point, it's time to revisit some of the information that's available out there, because there are many new ways for these businesses to qualify. If you were to be able to refer one of these businesses and get them an influx of cash flow, they're going to be able to hire you and maybe even refer you to more businesses because of the way that you handled them and the referral that you gave. So if you're a CPA and you're interested in learning more as well, hit me up at hello@financialselfreliance.net and we'll get you some information. These guys are experts at finding the ways that you can qualify. They want you to qualify. They want to help you to qualify. So if you think that you might be interested in learning more about the ERC, and if it pertains to you and your business, or a friend of yours is a business owner and they need some money, boy, wouldn't you be a hero if you actually referred your friend and you ended up getting them tens or hundreds of thousands of dollars that they could use in their business? They would probably love you forever as a friend. And frankly, there's an opportunity for you as a referring person to be able to make some money. So if you're interested in learning more, click the links in the description below and I'll have some information for you there. And you can always send an email to hello@financialselfreliance.net and I will get you all the information that you need. Let me help you get more money into your business. Once you have an influx of cash flow, you can then manage it effectively. You can protect it, grow it. You can do whatever you want to do with that money to help keep your business up and running, and maybe even get you to the point where you actually have some breathing room and you can move forward with your business and even grow it a little bit. There's over $1 trillion in the US Treasury right now waiting for businesses to apply for it and to see if they qualify. Let's get some of that money into your bank account where it belongs. If you missed the last video I produced, go ahead and find it here. Subscribe to the channel up here and check out this video up here, the YouTube things you might like. Until the next one, stay financially self-reliant.